Can you hear me okay in the back? No, I don't think this is really. Test.
Yeah, that's better.
Okay, so who would have thought there'd be this much interest in insurance, huh?
You sent out 37 memos.
You weren't supposed to say that. Well, good morning, everyone. I wanted to thank you for joining us this morning for the insurance presentation here at Tide Point. I want to welcome our guests that are going to be viewing this from home. We're not live, we're taping it, but we will replay it on the channel, on the app, later on this afternoon. So I wanted just to take a minute and welcome our two guest speakers. First and foremost, we have Karen Cornelius, our Vice President of Risk, joining us from our corporate office in V. This is Karen's first time in the community. Welcome, Karen.
Thank you. I'm so excited to be here.
Yeah, so we haven't had an insurance presentation in 2 years. Last year, Karen was just joining the company, so we decided to pause for a minute and then invited her back this year. And then we have Stephanie Stewart joining us. Stephanie is V's partner from Marsh, which is an insurance brokerage company. And she's been partnering with V for many years and helping us to pull together our insurance umbrella for every community in the V portfolio. So with that said, I'm going to turn it over to Karen and let her take over. We will have an opportunity at the end for questions. So if you just hold your questions to the end, we'll get to them. And Karen and Stephanie are going to be able to answer them. So all yours, Karen.
Perfect. Oh, good. My mic is on. Thank you. So good morning. My name is Karen Cornelius, and as Michael mentioned, I am the Chief Risk Officer here at V. I've been here for almost 2 years in January, and part of my responsibility at the corporate office is managing the entire portfolio of insurance that we buy for V. So today we're going to talk a lot about property insurance, which covers our favorite exposure hurricanes, but we have a lot of other types of insurance that we need at V. We have auto insurance for the vehicles that we have that drive around to outings. We have workers' compensation insurance to protect the employees. We have casualty insurance that protects from slip and falls. And so I have a busy job. But this is the season. I was telling Michael, starting June 1st, there are a number of us at the corporate office in Chicago on hurricane watch. So as you know, there's only a couple more days left of the season. It has been a good season so far, so fingers crossed, which is why we are able to come here today with smiles on our face and some good messages to share. So that's just a little bit of background about what I do on a daily basis. Today we're going to talk really high level about the property insurance that we have here at V, how it relates to Tide Point and your ownership of your units, and then any questions that you guys have about what we see in the insurance marketplace, what's going on in the homeowners marketplace. We can speak a little bit to that because we know that's important to you. But we'll be able to share the presentation today with Michael. So if you want documents after the fact, those will be available. If there's anything we didn't prepare today on the presentation that you think would be helpful, we're happy to provide that after the fact. So this is just the beginning of many conversations. I love talking about insurance, so this is pretty awesome to have all of you here today to listen. So really quick, we'll start off, as I mentioned, we're talking today about property insurance. We write property insurance on an annual basis. So every December 31st, we renew our policy. We pay the premium in annual installments. So our property policy at V covers all 10 communities. And that's typically how a corporate policy works. We cover all of the real estate that V owns and has an interest in. So insider scoop, we pay about $9 million every year for the property insurance that we have. Marsh is our intermediary, so they go and they help us talk to all of the insurance companies that we want to do business with, negotiate the premiums, and make sure we have the best terms and conditions in our policies. So when we talk about property insurance, we talk about the real property and property damage that can occur. And that's typically going to happen from a fire, lightning, water damage, or we'll talk today about hurricanes. So this is the policy that would respond if there is a large storm. We have the property damage coverage, and then we have an element of coverage for contents, and then a third element of coverage for loss of rents. So if our business was not able to keep going as it does on a daily basis because of the damage, there would be some insurance recovery for some of the money that we lost by running our business. Right now today, the company buys $400 million in total limits, and that's a per occurrence. So if there was a fire at this community or there's a fire at La Jolla, you have the whole limit available to cover your loss. We work with Marsh every year to benchmark and make sure that limit makes sense for us. Has our community values gone up? Do we need to buy more limits? And we're constantly reevaluating to make sure that we are protecting all of our real estate assets each year. So here is, we call this a schematic. It's a picture of our property program. We have about 20 different insurance companies that provide the total of the $400 million of insurance coverage. So in the schematic, every company is a different color or a different box representing how much insurance they provide in the program. We purchase insurance through many different outlets. We have insurance companies in London, in Bermuda, and in the US. So we are constantly making sure that we are protected and have the most competitive terms and conditions. And sometimes that means we go international to London and Bermuda where some more competitive terms can be offered. So in October of every year, I go along with my boss and Gary Smith, the president of the company, and we do about 25 meetings with our insurance companies. All of these representatives up here. We talk to them about all the great things we're doing at V, especially all of the great things that our facilities team is doing to upkeep our properties. And that helps the underwriters become comfortable with our risk, so that when we ask them to provide competitive terms, they're willing to do that. We talk to them a lot about our emergency evacuation plans, what's our plan for a tornado, a hurricane, an ice storm, right? Our portfolio is very diverse, and we make sure that, they feel comfortable that we have the best policies and procedures in place, so that if we do have an insurance loss, it is minimized as much as possible by the way we conduct ourselves. So we are going through our renewal process right now. We're in the mix of receiving quotes in, and then we'll have a new policy period starting at the end of December. But we expect it to look just like it does today. V is very good at maintaining relationships in the insurance programs that we have. And that's important because if there is a claim, those relationships matter in terms of getting claims paid. So most of these carriers that you'll see up here on our schematic, we've been working with for a number of years. They know us very well. And so we would expect, if we do have an issue or a claim, that they would come to the table, do their job, and pay the claim appropriately. So a couple highlights of our business, our property and business interruption insurance are up on the slide here. As I mentioned, in total, we have $400 million for each occurrence of a loss. Then, depending on the community where they're located, there might be certain sublimits. So today we're going to talk a lot about named storm, which means hurricane. And so for your community, we have $80 million of named storm coverage that would cover the property damage if there was a hurricane to come through. And then we'll also talk a little bit about flood. So that's more focused on water damage. And we have $200 million in coverage for the community for flood occurrence. And then there's a couple other sublimits outlined here. It starts getting pretty technical, but again, all of these sublimits are constantly reviewed for adequacy each year as we go through the renewal process. So if we were to do a large redevelopment and add value at a community, we would also look at the insurance sublimits and make sure they're still adequate for the exposure that we have in our real estate. So Stephanie's going to talk a little bit about the deductibles on our policies.
So there's a deductible, a base deductible for the community of $100,000, and that applies to any loss that doesn't have a more specific deductible. So we call it the all other peril deductible. So that is $100,000. So fire, tornado, things of that nature would apply here at High Point. The Zone A flood deductible is $1 million. However, for High Point, there's only one building that's designated in the high hazard flood zone, and that's the gatehouse. When you first come in, which is a very tiny building. So, probably not even $1 million itself, but everything else would get the $100,000 deductible, every other building. The hurricane named storm deductible is 3% of per unit, which is a math calculation that's associated with the values at risk at the time of loss. So 3%, if there's a building worth $5 million to replace, it would be 3% of $5 million is the deductible. Subject to a $250,000 minimum per occurrence. There's emergency evacuation, so if there is no actual damage, but you're needing to evacuate the community, that's $100,000. And water damage costs of loss is $100,000 as well for this community. I think that pretty much covers that. This is the right way, yes? Okay, sorry.
There might be one more too.
Thank you. So these are some questions that have been asked over the years, and we're kind of revisiting them once again. It is written on a replacement cost basis, so at the time of loss, it'll be determined what does it cost to repair or replace whatever the damage is, and that will be the recovery up to whatever limit applies. So if it's a fire, you have the full $400 million. If it's named storm, up to $80 million. We talked about business income and loss of rents. That's included at full value in that the entire limit that's applying at that for that specific loss. And again, we kind of already covered how these limits apply to Tide Point, $400 million, including the BI, the business interruption, and then that $50 million for the gatehouse, which we think is plenty, and then named storm at $80 million per occurrence. So if you did have multiple storms, that is a per occurrence limit. So $80 million is available for each and every storm. Renovations, V is responsible for the common areas in the care center where each individual units are the responsibility of the members of the community. So if you have some work that you're doing in your unit, that would be your responsibility to provide that coverage. Any questions? Here's where I think a lot of questions do come in. What is covered by V and what is covered by your individual homeowner's insurance policies? On a high level, it's, if something is permanently attached to the unit, that's typically covered by V. And then your individual contents should be covered by your homeowner's insurance. We get very specific here, and this kind of correlates to the master deed. So like toilets, bathtubs, showers, all these kind of permanent fixtures are covered by the V master program. And any, you purchase couch, your appliances, wall coverings, those would be covered by your condo insurance. So you could talk to your agent about, what's the appropriate limit that you need, and values that you need to report there.
Thank you. So even though we don't at V control or get involved really in your homeowner's insurance, we thought based on the conversation today, it would be helpful just to provide some information about homeowners and the marketplace that exists, and what you might be seeing when you have discussions with your agent. So this slide shows the combined ratio for U.S. homeowners insurance since 2017. And this basically is showing whether or not the insurance companies were profitable. Profitability, is at 100. So any year that an insurance company is operating at a combined ratio over 100, they're considered unprofitable, which is noted in red. And then the years where they're under 100, they're considered profitable, which is noted in the green. So you'll notice that since 2021, there were 3 years in a row of unprofitability. So the assumption there would be that you may have seen some increases in the rates that you were paying, even though nothing might have changed on your end. A lot of times what's happening in the marketplace gets pushed down to us as buyers. So this happens to us on the corporate level, and it happens to us on the individual level. But in 2024, there was some profitability, so you might see some relief. And then this year, there were no hurricanes. The cat activity was, it was earlier in the year, the wildfires in California, but those, we're not seeing them directly impact this homeowner's marketplace. So, I think we're seeing profit through the first half of 2025. If that continues, you should expect to see some stable results in your renewals or your discussions. And then this kind of gives another picture of where homeowners' rates have been. So the blue line here is a little hard to see, but since 2029, we did see that increase and that spike in 21, 22, and 23. So most buyers were seeing their homeowners' insurance rates go up in 2024. We're also seeing rates go up on the automobile insurance side. So if you guys are experiencing that, it's normal. We see it on the corporate side and also as individuals. And that's really, a lot of that stems from the technology in our vehicles. As vehicles become more advanced, they're becoming more expensive to repair. And so that's directly impacting the auto insurers. And then just some hints here that you might, because of these market conditions, get more questions from your agent. They might want to shop your insurance around. And we just wanted to provide you a little bit of context that that's pretty normal, what you're seeing, and that there are options out there. If you, feel that you're paying too much, you should always feel free to have your agent look around and see if there's another insurance company that can cover you. So those were our prepared remarks today. So hopefully we answered the overall questions that you came into about hurricanes, property damage, contents that are covered by V, contents that you're responsible for through your homeowner's insurance. But we would love to hear from the group if there's any specific questions, concerns you might have, or additional information that we could provide you in regards to insurance.
Let me get the mic.
Yeah.
Thank you, Michael. Several related questions, please. On your first slide, you said the named insurance is CC Development Group.
Yes.
I assume that's a subsidiary of V?
So CC Development Group is actually the top entity that owns and operates all of the communities. So in our organizational chart, it's most favorable to put the insurance in the name of the highest entity so that the coverage flows down and covers each of the 10 communities that sit under CC Development.
Okay, thank you.
Yeah.
On your second slide, emergency evacuation coverage, there was an asterisk, and I couldn't read it. It was very tiny print on the lower left-hand side.
Let me see. Okay, so emergency evacuation expense is a really good coverage to talk about because it doesn't mean that we have to sustain property damage for that coverage to be triggered. So typically with property insurance, the first thing that has to happen is that our physical property is damaged in order for the policy to respond. But we have negotiated emergency evacuation expense coverage so that in anticipation of a hurricane, if we think that it is the best interest to start evacuating and start incurring expenses to rent buses, start buying supplies in anticipation of an event, we do have some coverage to get reimbursed by our policy. And so that's extremely specific to the world we live in, but yet one of the most useful coverages that we might trigger on an annual basis. So we have a supplement of $2.5 million for each event that might undertake. So, you know, we had a scare about a month ago that there was possibly a hurricane coming this way. So if we started to incur expenses, then Michael would call me and we would say like, hey, let's report this into our insurance company under this clause. And same thing in Florida, they might do the same thing. And so that's really a very relatable coverage, I think, that we have and are lucky to have.
Thank you. Another question, if I may.
Of course.
On your list of the carriers, the various
Yeah.
carriers providing different coverages, can you tell us the best rate of the AM best ratings of those carriers?
I'm sorry.
I'm sorry. I'm asking with respect to the multiple carriers on this chart, what are the AM best ratings of the various companies? Are they A or A plus?
Yeah, they're all typically A to A plus. I mean, we can give you each
Oh,
individual.
that's all right.
But yeah, we go through market security to ensure that, you know, Marsh in particular is, you know, that's something we pay a lot of attention to. And that they are at A7 typically or better. And most of these are probably in the A plus range.
And finally, in that, you mentioned you have coverage in London and Bermuda.
Yeah.
Is that principal or reinsurance?
Yeah, it's direct insurance.
Direct.
Yes,
And I assume those carriers might have reinsurance.
they might.
Reinsurance.
Right, yes, so we don't, so there are instances where Marsh can get the reinsurance ourselves and find somebody to sit in front of them. But we don't necessarily ask each individual carrier how much potential reinsurance they're buying. But that there is a possibility that some are buying reinsurance.
Thank you very much. It's been very informative.
Thank you for your questions. Yeah. And one of the reasons, just to kind of expand off of your question, that we do spend the time to travel and meet face to face with our underwriters is that we can tell our story. And, you know, when we're having a great year and we are exceeding our competitors, we do get to choose who our insurance companies are. You know, we have that luxury, and we've been in that position since I've been here the past couple of years, where more than 20 insurers want to write our business, and they're competing against each other. So that's a really great place to be in, and we're really proud of that. So we are, you know, constantly, like I said, bragging about all the great things we do from a maintenance, facilities, upkeep standpoint, because that's what the underwriters care about. What are you doing as far as resiliency? That's a really big word we use these days, because that's going to make them more profitable. You know, they'll take on better risks, and that's really how they view feet right now.
One other thing I'll add is that some of these names you might not recognize, that's the paper they write on, but like Lexington is AIG, Westchester is Chubb, so like, those are, you might not recognize the names they use here, but they are, you know, very large global insurance companies.
Hi.
Hello. First of all, it's been a, do I need to push something? Is it coming through?
Yeah.
I want to thank you for doing this, and it'd be nice if we could have printouts of this.
Definitely. We told Michael we'll make a printout, so anyone who wants to keep this information, we'll do that. And then if there's any additional information we can provide you, I can send that over to Michael.
Are there any specific perils that are not covered?
Typical excluded perils are like war is not going to be covered, nuclear events, biological events. So the policy is written in a way where everything's covered except what's specifically excluded, and there's only a handful that are specifically excluded, and then what you might think of are just not available in the marketplace.
Okay. Is damage from water, like burst pipes, sewer backup covered?
Yes, it is. So that's a very common area of loss that we see, especially in the industry in which we operate. So we do have coverage for water damage, frozen pipes, etc. And that's subject to, let's check the deductible slide, a 100K deductible. So any damage over $100,000, the insurance company would reimburse us. Any damage $100,000 and lower would be self-insured, meaning covered by B.
Okay. The building codes now are different than when this building was built. So is there ordinance and law coverage?
Yes, there is, and I think we might have it referenced on the slide before this.
This one?
Yeah.
Oh, yeah.
So it's included.
Okay.
And then, so that's the undamaged, that's very specific. What you're referring to is the increased cost of construction. So there was a code that got put in place 2 years ago. So, you know, now you're required to do things a little bit different. It costs a little bit more money. That's where that comes in. So yeah, that is covered up to a pretty significant limit.
Okay, thank you very much.
Good questions, thank you.
A lot of us, since we live on the second floor and higher, use the first floor for storage or sometimes built-in rooms and so forth. What's the coverage of our material on that level?
So is it your personal contents, like clothing or extra items
Yes.
that belong to you?
But also a lot of people have built separate rooms on that first floor. As far as even bathrooms and laundry rooms and bedrooms and so forth, built by the owner on that first floor.
Okay, so you're in charge of the construction and any renovations you make to your unit, but once those are made and finalized and the construction's finished, then it's considered part of the property. And so if the new bathroom was damaged in a fire 18 months later, then the corporate property policy responds to the additional rooms that were built.
And then anything within those rooms, like furniture, that would be under your homeowners.
Just a point of clarification, the gentleman was referring to a veranda or a cottage on the first floor, the ground floor.
Okay.
People, that was not part of the original plan when the community was built. People have added on rooms, a bathroom or a bedroom. You're saying that's covered?
Yes, once the construction is completed.
Okay.
Yes, so it increases the value of the property of the cottage, right, Stephanie? Which
The
we,
replacement cost.
yeah, which we consider each year at the renewal. But once it is finalized construction, it's considered part of the property.
Thank you.
Yeah, thank you for the clarification.
You know, I don't think you're quite right.
Okay,
I'm not going to argue with you, but flood coverage is not covered for it's covered as long as the building is above the flood plain requirements.
That might be how the homeowner's insurance applies, and that would apply differently than the V Master program applies. So for this program, there's no difference, whether something's below grade or above grade. If it was a V, like furniture or something, that would be covered, but under your homeowners, you might need to talk to your agent about what is included for water, below the first finish level.
I might have missed it, but I don't think that I heard anything about wind, hail.
Yes. So wind and hail, where's my best slide on this? Oh, this one. Would be covered under the umbrella of the $400 million of the policy coverage. And then they would be subject to the $100,000 deductible. So if there was just a not normal storm, but not a hurricane that caused wind damage, or if you got hail damage here, we would file the claim and assume we would do the policy deductible of $100,000, and you would have full policy limits for the coverage.
But we would be responsible for wind and hail for our personal property, is that right?
Always, yes. So when we're talking about the V policy and the limits of coverage, we are mainly speaking about the buildings and the property damage. But the contents typically would be your personal contents covered under your homeowners.
I'm just curious.
Yeah.
Now, as a consumer, let's say wind blew off the roof,
Mm-hmm.
so then we had damage
Mm-hmm.
inside.
Yeah.
That's our responsibility.
To fix the roof and to fix the cottage or the unit, that's my responsibility under the V property policy.
Then we would be responsible for our personal.
Right, so anything that got damaged inside your unit because the roof came off is then a claim under your homeowner's policy. Yeah, but the good thing is that the property is the costly part of it. So we would have the $400 million in limits to fix however many roofs, were damaged in that event. Yeah.
Rather than a far-fetched question.
Okay.
A few months ago, I was home.
Can hear you.
A few months ago, I was coming home. Can you hear that?
Yes.
Okay. And if you picture, I live in the 501 building, which is this building closest to us. So I'm coming from the gate with the pool on my left, and at the crossover where people walk on the sidewalk, an elevator literally propelled through the bottom of that fence onto the sidewalk, where people walk daily to go to fitness and all. I come from Seacoast a few years ago, about 6 years ago, a lady was killed walking foolishly near a pond. But we have quite a few alligators, and I wondered on our alligator program, which I hope are renewed, but I still see them. What is the coverage for personal damage on a property with someone who is attacked by an alligator?
Meaning a person is injured by an alligator? I don't think it's property insurance, it is something unfair.
So it definitely is outside of the property insurance, right? So our liability insurance covers injuries to our members or residents, which could be a slip and fall or an injury as you're describing. And so depending on the circumstances, if there was litigation around the instance of what happened with the alligator, we would assign that sort of claim to our liability insurance company, and they would respond to it. So it's more of a personal injury type of policy versus the real estate property damage that we're talking about today. But I definitely understand that it is an exposure we have here as well as a little in Florida as well.
Let me bring the mic up. Hold on, we got to talk to that mic first.
Okay, good morning, and thank you for the information you've given us. Okay, so we have
I'm gonna give a specific example. If you renovate a bathroom, so the contents have changed.
Mhm.
The shower replaced it. So all the contents insured under the broad policy.
So in a bathroom, yes, the shower, the faucets, right, Steph?
Yep.
Those are covered under my policy, the V policy. So what happens is we assign a value every year to each of your houses. And if you did a renovation, then the value of your unit goes up after the renovation. So then if there's a loss, that we have the correct value of your house, including the renovations. Sure. And one thing just to kind of expand is that the insurance is written, as Stephanie mentioned, on a replacement cost basis. So if you have some high-end updates and upgrades in your unit, those are covered at the time of the claim for how much they cost to replace. Sometimes we have a claim and we decide we don't want this carpet anymore, we want to buy the nicer carpet. That's not covered under the insurance claim, but you can pay out of pocket at the time of the claim to make those adjustments. So anything that is in your unit before a claim is covered at the time of the claim for how much it costs to replace. So I feel like that's important too, as we talk a lot about upgrades and redevelopment and expansions.
What does V base its annual reevaluation on?
So a number of factors go into our reevaluation of the values each year. We use Marsh and look at values in the overall multifamily marketplace. A couple years ago, there was a lot of focus on the values of an insurance policy. Values determine our price. So as you can imagine, some people were undervaluing their properties, and it's only discovered at the time of a claim. So if you value for X, you have a claim at Y, the insurance companies are suddenly not pricing correctly. And so we've gone through probably the past 5 years, extreme pricing corrections. And so we'll look at construction costs in a specific area. We'll look at the costs that we actually spend to redevelop or reconstruct some of our real estate. And then we'll look at third-party valuations of, hey, inflation is 1%. We need to go up at least that, depending on our areas of where we have our communities.
As you know, V is the only community where the members own their units.
Mm-hmm.
Is fair market value determined by what a willing buyer will pay a willing seller?
No, it's based on what it costs to repair or replace it at the time of loss. So market value could be an extraordinary number, but it doesn't, and that's based on location and a lot of different, amenities in the area, but what does it cost to repair or replace that building in this location is what that's based off of. And those are, when we're looking at different things, like you may have heard of Marshall and Swift, those are the types of things we're looking at to verify the value. So if housing costs double, triple here, that's not going to impact what the insurable value is.
Yeah.
And what happens to our cars that are under the building?
So your cars are always covered under your personal auto insurance. Those are not under any of the V policies.
Seems us, you're very good at hunting best insurance policy.
Yes.
Why don't you do like one of the homes does up in North Carolina where they offer everybody a homeowner's policy adjustable by content, searching out the best source for that base homeowner's policy.
Sourcing on behalf of the members?
Yeah.
It's an interesting idea. I'll bring it back to the office and see if we've ever considered it.
They claimed quite a nice reduction for the base policy. Then you went in and declared what the contents were worth and adjusted your own personal rate.
Mm-hmm. I can see how that makes sense because a lot of insurance is economies of scale. So if you brought everyone together, yeah, I'll ask about that. Tom, our CFO, I think that's something, he could find interesting. We appreciate the innovative ideas. Insurance is an old school topic and area, but we work in an industry that's real estate, hospitality. We have people on our premises 24 hours a day. That's very unique when it comes to insurance exposures. And so we're constantly, seeking out better insurance companies, innovative coverages, like the evacuation coverage that match what we do and we need. Okay.
My question is very hypothetical, but could actually occur. I'm thinking about your property in La Jolla,
Yeah.
high end. Let's suppose they suffered a catastrophic loss that exceeds the limitations of coverage as you've outlined here. That occurs the first month of the policy year. 3 months later, High Point suffers a hurricane that potentially could exceed policy limitations. How do we sort between those two loss events and share the insurance proceeds between the two properties?
Yeah, sure. So, it's a per occurrence limit. So if it's a fire, wind event, you have that $400 million available at that first event and the second event. There's certain limitations like earthquake that have an aggregate limit, which means once your total losses for that year have gotten to that total limit, then you're out of limit. So that's really only applies to earthquake and flood. And those limits are pretty high. I think we're talking 100 million, which is more than the total insurable values at this community. An instance what could be more interesting is if there's a hurricane that's a single hurricane kind of comes through and impacts multiple communities in the southeast, right? Like the Florida communities in this one. We use modeling, RMS modeling, to determine the limits and be biased to a limit that's over and above what would typically be used as a standard to get to that point. And there have been instances where multiple communities were involved and the limit was more than adequate. So that is something that's looked at. We look at it holistically and consider what event could trigger multiple communities at once, because the single events is not really a concern because it resets. Did that answer your question?
I think so.
Okay.
Hey, can you hear me?
No.
Okay, is better?
Yeah.
Okay, thank you. I just wanted to get clarification on the cottages and verandas. Everything is elevated above sea level, obviously for flooding purposes. But some members, when they do come in, they finish their downstairs area, and I think we talked about that. Some people make a bathroom. Some people put bedrooms in there, and it is below the flood zone. So if an inspector came in to inspect the property, it might not pass because of it being below the flood zone. I just want to make sure that when we're talking to people that are purchasing cottages and verandas, that our policy covering that, should they make a whole room out of it downstairs below the flood zone. That's a concern that I have.
Okay. And the structure itself would be covered by the V Master program, and all the things that would have been covered if it were above grade. But anything within that is something that the individual members would need to speak to their agents about. And who's inspecting, that wouldn't be somebody for the master program that would say, this isn't okay. That structure would be covered under the V Master program, but unfortunately, our knowledge is limited with the personal line space and what exactly would or would not be covered below it.
So would it be advisable to speak to your insurance representative to get an additional policy to cover below flood?
Yes, they should talk to their agents about what options are available on the below levels, yes.
Okay, and one last thing is kind of determining, like if two cottages have a disaster. And one of them has just been updated, and the other one next to it is not quite to the one, its neighbor. I guess you make that determination on what the replacement cost is, not what fair market value is. But would it be a good idea, and I think we do tell our clients this, if you're making modifications or repairs or updates in your home, take pictures of what you're doing and have them on file, because if we do have to submit a claim, at least you all can see what they've done to get it to current.
Absolutely, that's a really great.
Pictures and videos, yeah, because that's the best evidence. We'll go in if there was a loss and immediately document, if there's water damage, you can see it on a wall. We do a lot of documentation via photos, but it never hurts to have your own photos of what everything looked like ahead of time, especially if you choose a pricier upgrade or something unique that maybe isn't common in the other cottages. Great question.
Thank you.
Oh, I think you had a question
in
here.
the back here.
Okay.
Just a curiosity question. Are there any liens or the assets owned by V here?
There are not, no. And all the assets,
That's a question.
there are no liens on any of the real estate at this community, nor is there currently any bank debt. Yeah.
There you go.
Is there a map, schematic, or whatever, of the floodplain here, so we can know each unit as to whether or not they are above or below, if they were to do something down in the garage?
Yeah, we can produce that for you.
Yeah.
Sure. It might actually be available to the public via the FEMA website, but we can pull that for you.
Yeah.
And
The town has it.
It is.
One more in the back and then one up front.
Okay, this question relates to a particularly devastating natural event like a hurricane that requires people not to return to High Point for an extensive period of time, months.
Yep.
Is that all covered? I mean, would people be covered in whatever place they had to live in the meantime?
Yes, so part of the property insurance policy that we purchase has an element called business income. So if we're not able to operate, if 20 roofs came off and we can't inhabit those cottages, we have to find you alternative housing until you can return to your house. And so that's something that is contemplated not only in our contracts and agreements, but also in our insurance policy. A very good question, obviously very applicable in this environment where we are in charge of your house, 24 hours a day. So, same thing with a hurricane evacuation. We find the hotel rooms. We coordinate a lot of those things as part of your advocate. Good question.
Thank you, Michael. I'd like to relate a personal experience that's relevant to a lot of the questions asked. When we moved here, we sold a townhouse. The entry level was the garage. It was a 6-car garage. It was the same as the footprint on the townhouse. We had a very interested buyer who wanted about 4,500 square feet. Our home was approximately 3,500. He was enamored with the 6-car garage. And he went back and measured and everything. They even measured the attic to see if they could put furniture up there. In any event, he contacted his personal insurance agent, and the agent said, under his policy, that entry level would not be insurable. And now, it's probably a function of the floodplain and the location, but it just emphasizes that if you're doing stuff on the entry level in a veranda or a cottage, check with your insurance agent.
very good point.
Thank you.
It is. And I didn't know that this was such an interesting topic that applied here, but we can also go home and look for some additional resources to assist you. While it's not something, we specifically look at from the corporate standpoint, we sure can find resources from an insurance standpoint to assist you with those flood questions. And anything else you think about after the presentation, once everything kind of sinks in. I know this was so much information, very technical. Obviously, this is my bread and butter. Stephanie and I talk insurance all day long, but we really appreciate the engaging conversation. We work so hard to put these policies in place to protect you guys every day, our employees. We think about it constantly up in Chicago of what's going on, what we can do better. So happy to, come back and have additional conversations as you guys see fit. But really appreciate us being invited here by Michael today. Appreciate everyone's time and thoughtfulness. And, don't hesitate to reach out. We can keep this conversation moving, and we'll hand out the documents and the slides so you have them to refer back to.
Thank you.
Thank you.